And let me just say it's a great pleasure to be here, and it's wonderful to catch up with friends and colleagues, including two friends that I worked with at the IMF on the prior panel. I say that because I'm going to pick up where they left and make 6 points about the operating environment that faces us all. And what I'm going to do is widen the aperture of the analysis. Because if the aperture is narrowed on Greece and to a certain extent on the Eurozone, I would sleep well. But once you widen it and ask what operating global environment is facing us, it makes for a less nice night of sleep. It's the old thing, you cannot be a good house in a bad neighborhood. You have to care about the neighborhood. And if you look at the neighborhood, there are 6 things you need to take away. Number one, we are in the midst of a fundamental secular regime change. Klaus Wiglin spoke about higher interest rates, we spoke about higher inflation, food insecurity, energy insecurity. Basically, we have moved from a world where demand was insufficient to a world in which supply is insufficient. And the main driver now of the secular outlook is the supply side. And that comes on top of other secular challenges, climate change, migration, you know the list. The second point I would like to make is the drivers of this change were in place before the Ukraine war. We would be having a discussion on this even if this brutal war had not broken out. But what the war has done is massively amplified the issues. And it has changed the distribution of potential outcomes for the global economy. So here's the distribution of potential outcome. The most likely is stagflation, a period of low growth and high inflation. The right tail, the good tail, is that we go back to high growth and low inflation. And the bad tail is a recession. And what the war has done is it has virtually eliminated the right tail, made it very thin. It has significantly increased the risk of recession for the global economy. It's not still the baseline, it's a risk. And it has maintained the stagflationary baseline. The third issue is that this regime change has caught people by surprise. Policymakers were still operating in a world of sufficient aggregate demand when they were actually facing insufficient aggregate supply. I'll give you a very simple example that I think captures all this. The Federal Reserve. In March of this year, when the United States printed a 7% inflation, the Federal Reserve was still putting liquidity into the system. It hadn't touched interest rates, but it's also still putting liquidity. So the policymakers and central banks in particular got caught offside. Companies got caught offside. Suddenly, it's not enough to talk about efficiency. You have to talk about resilience. So when you have an operating model that is targeted as just in time, you tend to forget the just in case. And what we've seen is companies scrambling to respond to the supply side shock. And third, financial markets. Frothy markets used to massive, predictable injections from central banks, totally distorted. There is no safe asset anymore. Correlations broken down, and somehow they have to respond. Which leads to the next issue is, can you solve this? In theory, you can solve this. You can solve this through the sort of domestic policies we heard about in the prior session. central banks making sure inflationary expectations do not get out of control, governments focusing their fiscal effort on the most vulnerable segments of the population, much more pro-productivity, pro-reforms measures, and much greater emphasis on financial stability in the non-bank sector. It's not the banking sector that's the problem. And then there's an international element. A lot of these issues are collective action problems. If you like game theory, this game has to be solved cooperatively. Are we there? No, we're not there on the domestic side, and we are certainly not there on the global side. On the global side, we're trying to solve a cooperative game uncooperatively. So what is the result? Recession concerns, inequality concerns, global fragmentations concerns, and unsettling market instability. And then my final point is what's next? Adapting a phrase that came from the US Central Bank, they said you need skill and you need luck. I would add you need time, skill, and luck. And the time element is important because we've already lost a lot of time. For you, for everybody, is the reality that we are going to be operating in a world that's subject to many more outcomes. This notion of unusual uncertainty. It's not just uncertainty, it's unusual uncertainty. And if you want a basic question that you have to ask yourself is, are you confident that you have the three attributes that you need in a world of unusual uncertainty? That is resilience, the ability to bounce back from a mistake. You don't want to make a mistake, but you're likely to make a mistake. Most mistakes are recoverable if you have resilience. Second, optionality, the mindset that is open enough to think differently. And third, agility, the ability to move quickly when you have clarity. Without the resilience, optionality, and agility, this may be a much more difficult operating environment than it should be. Thank you.